If you're a complete beginner in Forex trading and what you're looking for is a way to start making money since day number one, in this specific video, I'm going to give you a complete tutorial as to what you have to do day number one in order to start making money with Forex. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, we're gonna talk about how you can start making money with Forex since day number one as a complete beginner. But if you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you'll hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. Hey, before I jump into the content of this video, if you're a very beginner and you want to get a 100% free Forex training, I'm having one live this week. So make sure that you register using the link below in the description of this video so that you can get the date and time of the next live webinar where we are going to talk about everything in regards to Forex trading as a complete beginner. Remember, this is at no cost during this week, so make sure you register right now. Now let's dive right into the video. All right, everyone. So the first thing that you gotta do if you want to start making money today with Forex is getting a free TradingView account. Now, TradingView.com is the website that I'm referring to right now. And to me, it's super important that you learn how to use this specific platform. Why? Again, it's 100% free, and number two, because it's the most reliable one. Yes, you can use MT4, you can use MT5, which is fine. However, if you're using a Mac computer, you're gonna understand that Forex and MT4 and MT5 is kind of complicated. However, TradingView is web-based platform, so you can use it in Chrome and Explorer, or not sure what other browsers are out there, but yes, you can use it basically anywhere. So that's super important. And the reason why I'm telling you get a free account with them is because if you actually go without having an account with them, you're gonna get pop-ups telling you to register, that is free, whatever, every like 10 or 15 minutes. And it's actually kind of annoying, and it might make you miss an opportunity to enter a trade. In addition, when you actually get a free account, you are able to choose more than 3 indicators, if I'm not mistaken. I'm not 100% sure. They do offer you a few plans where you can pay like $9, which is the one that I have for $9 a month. You don't really have to, but it allows you to use even more indicators and so on and so on. But at the moment, just get a free account with them. You can get it with a Gmail account. It's 100% free, so definitely that's a must. That way you're not gonna get any pop-ups and you're not gonna get interrupted when you are following a strategy. Second thing that you gotta do in order to start making money since day number one is getting a trusted broker. Now, I'm gonna talk about 3 different brokers in this specific tutorial, but you can choose any broker you want to as long as it's trusted and it's reliable. The first one is IC Markets. That's a broker that I personally use and I love it to death. Okay, it's super cool. I use some of the brokers, but this one is by far my favorite due to the raw spread plan that they have. That way you don't have a spread, you don't lose trades by a few pips. I know I'm talking about a few things that are a little bit more advanced, but just this is a really good broker. Second option could be XM. This one, by the way, the minimum deposit, I think it's $200. XM has a minimum deposit of $5, so it's definitely the lowest trusted deposit broker out there. And the other one, just in case you guys are in the US, then Forex.com I think is the best one for you. You can use Oanda as well, which is trusted, but I just never tested it before. But Forex.com is a broker that I personally use as well, as well as XM, and I also use AvidTrade. I used in the past eToro and some of the brokers out there. Admiral Markets is another one. But it's really up to you. I'm just showing you the top 3 brokers, in my opinion, that are the best ones. You will be able to find the links below in the description of this video to these brokers. Again, if you're in the US, then Forex.com. If you're not in the US, then use IC Markets or XM. They're way better. And when it comes to spread and when it comes to availability of different instruments as well in your broker account. Now, the third thing that you gotta do is actually follow the strategy. In this part, I'm going to extend just a little bit, but I promise you that this strategy that I'm about to teach you is the easiest strategy in the world of Forex. And it's profitable and it's easy to use. Obviously, probably there are more accurate or a more profitable strategy in the market, but the most important thing that you gotta keep in mind about this strategy is that it's easy for beginners, and that's exactly what you're looking for, right? So the first thing that you're gonna do is add an indicator called exponential moving average, which is this one right here. You're gonna add 2 different lines. The first one is going to be a 20 moving average, which is this one right here, a 20 moving average. You can choose whatever color you want to. And the second one is going to be a 200 moving average. And again, the color, it doesn't matter. It's really up to you as long as you fully understand it. So one thing that you got to keep in mind is that the 200, as you can see, is a lot more stable. It's a more stable line or moving average, and the 20 is actually moving along with the candlesticks, and it looks a little bit crazier. You don't really have to be an expert on it. All you need to do is just wait for a crossover on those 2 moving average in order to enter the transaction. Now, for this strategy, I'm going to be using a 1-hour candle, as you can see right here. Why? Because the longer the trades, the less complicated it is, okay? Just so FYI, a swing trader has almost no emotions involved whatsoever on their trades, while a scalper trader has a lot more emotions involved in their trade, okay? Now, when you actually see that the 20 moving average is going across, crossing above the 200 moving average, then that's basically when you enter for a buy position. And when you see the opposite, when you see that it crosses below, then is when you enter for a sell position. As simple as that. Now, let's go ahead and do it by looking at the charts and see where that actually takes us, okay? So right here, as you can see, there's a small movement on the trades, and this happens all the time, okay? You will see those waves of the 20 moving average moving along all the way on the 200 moving average, and those are the entry positions that we're looking for. So yes, we are going to wait up until we see a crossover, and then I'm going to tell you exactly how to enter that transaction. So right now it's moving like kind of close, and eventually we'll just cross. There you go, boom. So when it crosses, as you can see in this area, you don't enter on this candle. You don't enter on this candle, you enter on the next one, which is this one right here, is this small green one, right? Hopefully you guys can zoom in a little bit more. Now, once you're gonna enter, I'm gonna use a drawing tool right here to show you how you're supposed to set your take profit and your stop loss, okay? As simple as that. So here, you can see that we're gonna enter in this area, perfect. Now, we're gonna use one more indicator called ATR, or average to range. As you can see, it's right here, average to range. Now, this is going to one that's going to determine what's the stop loss that we are going to choose. So as simple as that, we're gonna go into 11, which is the ATR, as you can see, 11. Why? Because the last decimal, it doesn't count. And by the way, this strategy will work for Euro USD, for AUD USD, USD CAD, and GBP USD, okay? It will not work with JPY pairs. Now, as you can see, it's 11. So we're gonna double that amount, and that's gonna be our stop loss. So our stop loss is the ATR at the moment is 11, then is gonna be 22. It's super important that you keep the ATR, you keep an eye on that ATR, because that ATR will basically be changing for every single candlestick that you put in. Okay, so 22 is the stop loss, And with this strategy, we can go as high as 2.0, or we can even go at 3.0. It's really up to us. We can close the trade manually, but it will be profitable if you leave it at 3.0. So as of right now, we just see how the market will perform. Now, what this does is that identifies a change on a trending. This is exactly what this crossover actually identified, that the price will stop going up and it will start dropping a little bit, and therefore is where we enter for the transaction. So as you can see right now, we won that trade for 3.0, and I'm going to explain you right now in the next point what is a 3.0 risk reward. But I just want to give you a little bit, one new example of a new trade once it crosses again, because like I said, this happens all the time. It keeps on crossing and changing on trending and so on. And what you're looking for is those change on trending. So again, take a look at this right here. We're now going to enter here. We're going to enter on this one right here, right? So this is going to be a buy position. Where is it? Right here. This is the buy position that we're going to enter. And again, we're going to take a look at the ATR, and we're going to identify that it's a 22 ATR. Okay, that's a big ATR. So therefore, that means that 44 will be our stop loss, right? Kind of in there. Yeah, no, that's too much. Okay, there you go, 44. And again, we can go ahead and set the take profit to a 3.0. Although right now, because of the ATR, I think it's too high, but it could be doable. Remember that you can always close your trade manually. Okay, now we see what happened in the trade, and boom, it hit the take profit again as a 3.0. Now, obviously, you're not gonna win all the trades. Okay, again, this is not a 100% strategy. If it was, everybody would be millionaires at the moment. It does require some sort of common sense and follow the instructions, right? For instance, right here, we have a new position enter. This is a sell position right here, and this is where you're supposed to enter. So what we're gonna do is that we're gonna go and get again a short position. By the way, if you actually feel like you're getting missed or you're missing something in this video, you can rewind it and watch it as many times as you want to. I'm going a little bit faster right now because I already went through the instructions. So this one is a 13 ATR, so that means that a 26 pips will be our stop loss. And again, we go for a 3.0 risk reward ratio, and we're gonna see what happens. Okay, as you can see right now, we lost one trade. Okay, we lost this trade, which again, it's completely normal because in the end, it's not 100%. But here's the most important thing. First of all, you need to use this strategy. Okay, keep that in mind. And second of all, now this is the money management that you need to follow. Whenever you enter a transaction, and by the way, let me just go ahead and find a video that will help you with this. I posted this video about, I don't know, it was on December 1st, where I showed you a free plugin so that you could actually start calculating your risk, reward, or your lot size on MT4. If you're gonna be using, for instance, Forex.com, or you're gonna be using which one you can use, OC Trader or something like that, then you basically don't need this. But if you do, make sure that you actually go and check this video on my YouTube channels, how to calculate the lot size on MT4. Why? Because what you need to calculate is actually this stop loss. The stop loss, or SL, needs to be, for you, since you're a beginner, 1%. 1% risk. That basically means that if you have a $100 account, then you should be risking $1. As simple as that. Okay? Now, if this is $1, this is what represents the 1.0, the 3.0, I'm sorry, the 3.0. Remember that 3.0 was risk reward. That basically means that for every dollar that you're risking here, you're making $3 on the profit area. Okay, so since we actually won two trades actually, 2, 1, and 2, we won a total of $6, right? And we lost one, which is $1. In total profit, we ended up making $5. in these 3 trades. Does that make sense? Now this is the money management that you're supposed to use. Oh, the strategy looks good, and if you have $100 in your trading account and you invest $20 into one trade, then that means that you're gonna make $60 if you win that trade. That's a 60% increase. Yes, of course, that's just math, okay? But it's not the way you're supposed to trade, okay? Trading Forex is risky. So if you don't use this money management technique, then you're gonna end up wiping up your trading account and saying that Forex is a scam and that it's really hard to make money. No, I'm teaching you the easiest way to make money with Forex trading, and this is the way you're supposed to trade. Now, one thing that you should keep in mind, and it's super, super important, is that there are going to be bad days and there are going to be good days. And the money management plan that I'm telling you is actually good for the bad days. Why? Because that way you're not going to lose that much money when you actually have a crappy day. Now, this is for day number 1. Okay, so if you're watching this video right now and you start applying this strategy right now, you're going to start making money. Okay, that's for sure. But you need to follow this path for an entire week. Why an entire week? Because I want you to actually realize what are your mistakes during the week. Probably late entry, you picked the wrong stop loss, you closed the trade too early because you were nervous or something like that. Whatever reason it is, you need to fully understand that the most important thing is that you follow this path for an entire week and then check if you made any mistakes and correct them. Okay? Super, super important. An entire week, and then you write down what were your mistakes, and the following week you don't make those mistakes because you have it in front of you. You can use some notepads and so on. And the last thing that you need to do in order to be a profitable trader is come back within 1 week or 2 and leave a comment in this specific video and tell me, hey Chris, it worked for me, or no, it didn't work for me. Whatever your result is, let me know in the comment section below so that I know whether I helped you or not. Hey, I hope you really enjoyed the content of this video, and if you did, make sure you smash the like button to support this YouTube channel. If you have any questions or comments to share, you can put them in the comment section below. I'll be glad to answer those comments as soon as I can. And thank you for watching this video. Don't forget to subscribe, and I'll see you on the next one.